Hey everyone, my name is CJ. I think that investing should be about simplicity. So in this video, I'm not going to cover everything that Warren Buffett said in the Berkshire Hathaway Annual Meeting this year, but I will cover the few most important points that I think that all investors can learn from, regardless of whether you're just beginning or you're a seasoned veteran. At the beginning of the meeting, before he and Charlie entered the Q&A portion, he gave a little bit of a presentation that, to me at least, really solidified and revealed a new mental model in the ways that I can think about valuing and just thinking about business in general. So let's get into this new mental model that I learned from Warren Buffett that he just shared at the annual meeting. First off, I really appreciated the fact that Warren Buffett provided real, tangible value through a thought exercise that he presented right at the beginning of his appearance for the annual meeting. He has been using this year and last year, because both of these meetings have been remote, he's been using PowerPoint presentation slides to sort of help him convey messages. So I really like this approach because it gives him the ability to be a teacher, which I think he has said that that's the number one thing that he wants to be remembered for, is being a teacher and a valuable educator. Buffett presented this slide here that shows the 20 largest companies by market cap as of March 31st, 2021. So as we can see, 5 of the top 6 largest companies in the world are based in the US. And 13 of these companies out of this 20 are based in the US. Of course, we see 3 Chinese companies, a Taiwanese, a Korean, a French company, and then Saudi Arabia's golden goose, Saudi Aramco, which he described as basically a whole country's productive assets for sale, which I thought was kind of interesting. The largest company, Apple, has a market cap of a little over $2 trillion, and the 20th largest, which is a French company, has a market cap of just over $336 billion. We see plenty of familiar names on this list, such as Apple, Microsoft, Amazon, Alphabet, Facebook, and Samsung, Walmart, you name it. All these household names, of course, they're the largest companies in the world, and rightfully so. They're all outstanding businesses on this list. So we take a look at this list, and Warren Buffett posed to the audience a pretty simple question. Out of these 20 companies, in the next 20 years, how many of these will still be on this list? He encouraged us to think pretty deeply about this. Now, you can pause this video if you want to take the time to think about that right now. Otherwise, we can move on to the next part of the question. Then Warren presented us with another slide. This time, it was the 20 largest companies by market cap in 1989. Now, this is over 30 years ago at this point. And what's the first thing that you notice about this list? Well, there are a few things that jumped out to me immediately. First of all, almost all of these companies are based in Japan. It's obvious based on this list right here that Japan was in an economic boom. The Industrial Bank of Japan was the number 1 largest company by market cap, sitting at $104 billion. In fact, the top 4 companies are all Japanese banks, and we don't see a US-based company until number 5 with Exxon. Especially if you're not based in Japan, how many of you are familiar with the economics or the name of Industrial Bank of Japan, Sumitomo Bank, Fuji Bank, Daiichi Kangyo Bank? I mean, I'm not familiar with those at all. Now in the US, we do see some household names here. Exxon, we have General Electric, IBM, Toyota is a very powerful brand in Japan still, and Philip Morris. And then at the very bottom, we have Merck & Co., and their market cap is at $30 billion. Warren wanted to illustrate by showing these 2 slides that out of the top 20 largest companies in 1989, exactly 0 of them are now in the top 20 largest companies in 2021. Now, if you're thinking, how is this a mental model and why is it even important? Well, let me tell you this. First off, Buffett is showing a prime example of how brutal capitalism is. We see 20 of the top companies, which in all likelihood in 1989 seemed unstoppable. You think about Exxon or General Electric, what could go wrong with those businesses? One of the main takeaways we can learn from this is that the future changes in absolutely unpredictable ways. Now, one point that Warren made was that investors in 1989 were so sure of themselves that these were the best companies, the best that humanity had to offer. And that echoes the sentiment today that Apple, Amazon, Google, Alibaba, these companies are pretty much indestructible. He doesn't think there will be a complete turnover of all top 20 companies from today in 2021 until, say, 2041, but it's probably going to be a lot more than he or we expect. Today as investors, we have such confidence in both the services and hardware business that makes Apple pretty much seem unstoppable. In addition to that, we pretty much think Amazon when we hear e-commerce. So these names are synonymous with entire industries at this point. But that does not mean that 20 years from now, the landscape is going to be the same. In fact, there's probably going to be an unknown that nobody can really foresee at this time. Most of the companies on that list in 1989 were either financial companies, they were banks, they were oil and gas, they were steel. So we have all of these remnants of the Industrial Revolution that were super powerful in 1989. And of course, these have very significant impacts today as well. And there's also huge differences in just the sheer growth of these companies in this period. I mean, the largest company was 104 billion in 1989, and then Apple we have today at over $2 trillion. So the growth is there. Now, as we can see, Japan was very dominant in the markets in the late 80s. However, they don't show up at all on this list today. And I would speculate that in 20 years from now, we'll see many more Asian and African companies on this list compared to the amount of United States listed companies on this list. Okay, that was kind of a long-winded way to explain that businesses change, capitalism is brutal, and businesses that we believe are unstoppable right now very well may fall to the wayside in the future. The rise of the internet and the data economy has completely shifted the landscape of what we find valuable and what's reflected at the tops of the markets. And in 1989, I bet there were maybe a handful of people that were able to predict the future power of the internet. So who knows what lies ahead for us as investors and just citizens of the world in the future. It could be AI, it could be something else entirely. But that's the great part about being an investor. It behooves us to continue to try to predict and learn these new trends as they're happening, because it will only benefit us to know more about changes in the future. So the idea is kind of simple, to be honest, but it's definitely not easy. I want to reiterate that it is not easy to predict the future. I mean, nobody really can do it accurately. Sometimes you get lucky, or sometimes you have one small insight that might give you an edge over other people. So be intellectually humble and honest with yourself. The future is obviously very unpredictable, as we clearly can see through these two charts. So just keep that in mind as you're looking at companies, and maybe think about, where will this company be in 20 or 30 years? Maybe we can call this the assumed dominance model. Something like that. I don't know, that's probably a pretty terrible name. Let me know in the comments below if you have a better name for this mental model. Maybe we can just call it the capitalism is brutal model. Yeah, that sounds a little better. Warren used this next lesson to illustrate that investing is not as simple as it looks. And while it may be very easy to spot a really hot sector that's obviously going to continue to grow, say electric vehicles, it is not easy to pick the winner. That's for damn sure. Buffett showed a list of defunct automobile manufacturers in the United States. Now, when he was doing this research, he was just going to show the whole list, and then he saw that the list was huge. So he narrowed it down to the companies that were going to start with M. And yet that list was many pages long still. So he even narrowed it down further by doing companies that just started with MA. Most of the companies on this list have gone by the wayside, but we can see some companies that are still around, such as Marathon, Maytag, and Marlboro, for instance. Now, you may be as surprised as I was to hear that a tobacco company like Marlboro was trying to enter the automobile industry in the early 1900s. So I think on this list there may be 30 or 40 companies that just start with MA that all tried to be successful in the automobile industry. And as we know today, there are only a few major US companies left. We have General Motors, we have Ford, we have Chevrolet, and we have Tesla. Although many proponents of Tesla would argue that it's a technology company and not an automobile company, but we're not going to get into that. So again, what's the lesson we can learn from this slide? Well, basically, we see 40 companies starting with just the letters MA that all failed to produce a viable product in automobiles. So again, this tells you capitalism is very brutal. You have to have the right product at the right time, serving it to the right market at the right price. It's too many factors to get right, and obviously it's not going to be easy to predict which one is going to come out on top. So please let me know which of the electrical vehicle companies are going to come out ahead in the future. I would love to know. Is it going to be Tesla? Is it going to be GM? Is it going to be Ford? I don't know. Please let me know what your thoughts are. Most of business and capitalism in general is about failure, unfortunately. Companies that are dominant can remain dominant for a long time. However, when there's a paradigm shift, the companies need to adapt, or a new host of companies are going to come up and take their place. It's as simple as that. Right now, it does look like Tesla is the dominant player in electric vehicles, but we have a ton of other players in the space that could come and eat Tesla's lunch very easily. We have General Motors, for instance, there's BYD in China, there's a whole host of other competitors. Now, it would be pretty funny if one or maybe all three of these companies became the dominant players in the industry in the future, but just to be honest, I have no idea if that's going to be the case. So while the rise of electric vehicles is pretty much a foregone conclusion, it's one of the hottest sectors in the entire market. It is not easy to spot the clear winner in the future. I mean, we can use the example of Amazon and e-commerce. There were a bunch of haters on that company in the late 90s that thought it was basically just a bubble stock and it was going to go by the wayside after the bubble popped. And here we are today, seeing Amazon as the #1 dominant e-commerce company, especially in America. So I'm going to take this as a lesson and think about, just because I can identify an area to invest in the markets, that doesn't mean that I'm going to have any advantage picking the winner of that sector. Maybe we could call this model the picking a winner model or something like that. I don't know. Again, let me know. Speaking of Amazon, another e-commerce giant that Charlie Munger recently invested in is Alibaba. You may enjoy my video over here where I discuss my initial investment thesis for Alibaba. Otherwise, thank you so much for watching. I really appreciate your time. Thanks for sticking to the end of this video with me, and I will see you next time.